Good morning. Can you hear me?
Yes, ma'am.
I can.
All righty.
Hello,
Good. Thank you.
everybody. Hola.
Hello, everybody.
Oh, there we go. I'm gonna make sure we have everybody on before we begin.
Hey, Byron, it's April. I just want to make sure you can hear me.
Hey, April. Yeah, I can hear you.
Perfect. Thanks.
Becky, do you know if Alicia's
Walk away for a minute, Byron. I'll be back.
Okay.
Morning, everyone.
Never mind. There she is.
What about Councilmember Smiley?
I don't see him on just yet.
Hey. Yeah, I have it. All right, thank you. Okay, I will. Thank you. Love you.
Here, let's just give him a minute.
Okay.
Miss Glover, how are you today?
I'm good. How are you doing?
I'm good. Happy New Year.
Thank you. Same to you.
Did you all have a good Christmas?
Yeah, we had a good, quiet Christmas. We stayed home, and Kurt and his family came here, so we had a good Christmas. Yeah.
Did you cook?
I didn't do a big cook. I just made some barbecue pork, and my sister-in-law did cabbage and potato salad, and we had cornbread. So that's just a basic meal.
That's all you needed. Especially
Yeah.
that cornbread. That cornbread, that's all you need.
Yeah. Did you have a good Christmas?
I did. I had 8 people at my house. My everybody in my family, but one of my sisters and my brother-in-law. My brother-in-law ended up with COVID a day before Christmas. Now he's fine. He had a vaccine and a booster and everything. He just had COVID, so he had to stay at home. But I told him it was not an excuse not to give me my Christmas gift, though.
That's right. That's right. Don't let him get away with that.
I still expected that gift.
Yep. I know what you mean. Whew.
Here, did somebody text Rick?
I can give him a call really quickly.
Did he accept?
Byron, am I supposed to be on YouTube?
Oh, you're good. You're good. You're good.
Yeah, we yes, we have to stream the meeting live. It's a little bit different than the normal process because it's a virtual meeting. So yeah, we're streaming live on YouTube right now.
Rick is right here.
Oh,
okay. Let me just go check and hold on.
Okay. Do we need to set up a workstation for him, I guess?
I believe he was going to go see if he could get in the conference room.
Okay.
He is getting ready to log on right now. I think he went up to the council chamber, up to the to 3:37.
Okay.
Now, where did I put the minutes?
Hello. Somehow I thought this was a real meeting.
Yeah, we had to kind of change last minute, and so it's going to be 100% virtual.
No
Okay.
sweat. I'm here in the, I'm at City Hall though. This is the like council conference room. So I know it looks like it's been painted, but. Okay. So is everybody here?
Yeah, I think everybody's here. One thing that I do just want to remind the council members and staff is that since we are having a virtual meeting and we are streaming this live, we do need to make sure that we announce that we have a quorum, and we need to make sure that we do a roll call vote, just so that everything is kind of recorded proper in accordance with what Valerie was telling me.
Cool. Well, I will then call the meeting to order and ask Valerie to call the roll.
I don't think Valerie is actually here. I can call the
Ask
roll.
clerk to call the roll. Whoever's serving as the secretary or clerk.
I can do that.
Thank you.
Councilmember Smiley,
I'm here, alas.
Councilmember Glover,
Here,
and Councilmember
can you hear
Meyerhofer.
me?
Yes, ma'am, we can.
And I am here as well. This is
Okay.
Brian.
And for the purposes of the recording, I'll also just call the other staff that's on and attending this meeting as well. City Manager Wall.
Here, do you want me to say here?
Yeah, you can. Yeah,
Okay.
I'll just. let
I'm
everybody
present. Okay, present.
Deputy City Manager Cowan,
Here.
Assistant City Manager Graves,
Here.
Financial Services Manager Jacob Joyner,
Here.
Internal Auditor Alicia McNeil,
Here.
Director of Information Technology Matt Haga.
Here
Haga. Matt, I've never actually.
is Hager.
Haga. Grants Accountant Becky Derdarian.
Here.
And we also have Financial Services Administrator Janata Harmon.
Here,
And Cherry Becker, Partner and Auditor April Adams.
here.
And I am Director of Financial Services Byron Hayes. Did I get everybody that's on the call today?
Well, thank you, Byron, for doing that. So now that we've done agenda item 1, introductions, we'll now do agenda item 2, which is to review the December 4th, 2020 Audit Committee meeting minutes, which were emailed out earlier. Has everybody had a chance to review those? Does anybody have any revisions to suggest or wish to motion for approval?
Motion to approve.
Let the record show Brian signified by the thumbs up that he has seconded that motion.
Second.
All those in favor say aye. Aye. All those opposed say nay. The minutes are approved as presented. Agenda item 3, a review of the fiscal year 2021 draft financial statements. Byron, is that you?
Yes, so I will share my screen now. Can everybody see the presentation, the initial slide?
Yes.
Okay, all right. So I am briefly going to go over the results of the draft financial statements as well as the rest of the audit for right now, and kind of let the committee know where we are, and give some information about just both some audit highlights as well as some financial information for the end of the year. I'll start out with the highlights, and I will let Cherry Becker, it's April Adams, our financial auditor for the year, just kind of do a brief overview after I'm done with the highlights, and then I'll jump into the financial information. So we'll go ahead and get started here. So as I was stating earlier, this is the fiscal year 2021 financial audit, and just going over some brief highlights. Obviously the one thing that you guys do want to know, that Cherry Becker's will issue an unmodified opinion on the financial statements for the year ending 2021. An unmodified opinion is the best audit opinion that can be issued in a financial statement. So, much thanks goes to all the staff and all the everyone in the city that's been involved in this process. It's been a long and arduous process. I can't thank them enough. Also can't thank Cherry Becker enough for being our auditor during this process, and kind of working through that with us. Additional highlights. Again, this is the second year that the city was responsible for preparing our own financial statements. That also cannot be understated. That is a major milestone in our city's history, that we're able to prepare our own financial statements. Just a couple of additional notes with that. We did add data cloud storage just for some additional redundancy. Now, one of the things that we had talked about in the last audit committee meeting was the idea of making sure that those statements are protected and are able to be, housed and accessed in the event of any sort of, ransomware attack or any other type of technology deficiency that we might see. So we just added that additional cloud storage for some redundancy, in addition to housing files on our servers in-house as well. We also added some additional linking capabilities to the notes and the statistical sections of the ACFR. Just for another note, they did, the GFOA has changed the order of the annual comprehensive financial report. So it's now called the ACFR instead of the CAFR. But we did add some additional linking capabilities so that the notes will flow smoother into the financial statements, and we will be able to kind of map that information so that it updates a little bit easier, and there is a little bit shorter time to be able to maneuver through those notes and maneuver through those financial statements together. We also began implementing additional integration of additional staff within the statement process. We currently have 3 members of staff within the financial services department that have undergone the North Carolina School of Government financial reporting class. And we also have an additional staff member that underwent a national financial statement class. So we're trying to get our staff kind of more involved and better trained and better organized to be able to take on additional staff or take on additional tasks within that statement process in order to kind of help speed that process up as well. And just as I noted earlier, this is the second year that we were able to complete those statements, and we did that in the midst of COVID. So I just want to take some time to thank the financial services staff, as well as other staff within the city, on a great job of being able to work through that and get that done within the challenges that we faced this year. Additionally, there were no material weaknesses or instances of material noncompliance within the financial statements. No material weaknesses or significant deficiencies within the federal awards, and no significant deficiencies were identified within the state awards as well. We did have one finding this year related to PAL bill accrual entry, and that did result in us making an additional entry as well as amending the state PAL bill report. However, staff has already implemented a corrective action and a mitigation plan for that particular instance. What we're planning to do is basically increase oversight for department invoices over the threshold of $25,000 within the financial services department, as well as strengthen the workflow process within our ERP system by adding additional financial services approval to those invoices, so that we are able to catch any sort of accrual entries like that in the future.
What was the size of the accrual?
It was just under $1 million. Essentially, what happened was we had one invoice related to Power Bill that had the wrong invoice date on it. And so our threshold and our test at the end of the year is to make sure that we capture everything that where the work occurred prior to June 30th and accrue that back into the previous fiscal year.
So the impact of the error not being caught would have just been recognition of revenue in a different fiscal year rather than actual failure to invoice or something like that, right?
Right. It was not a failure to invoice or anything like that. It was the timing of the invoice when it occurred, and the fact that the wrong invoice date was put into our system, so we didn't actually catch it because of the way that we kind of go about looking at that. So what we've done is we've added additional approval steps within our workflow process within the financial services department for any invoice over $25,000, just to make sure that there's additional eyes on every invoice that comes in of any sort of magnitude like that, to make sure that we catch those things in the future.
Thanks.
Mm-hmm. And additionally, the city did receive the GFOA Certificate of Achievement for Excellence in Financial Reporting. And we also were able to have our credit rating reaffirmed in October of 2021, even in the midst of COVID again. It's the second year that we've had a credit rating in the middle of a COVID-19 pandemic, and we were AA credit affirmed again by S&P. We had debt issuance that took place, as the council members know, in October of 2021. And so that's why we actually went out for the rating at that time. So it is also a major accomplishment for staff to have that credit rating affirmed again for the second year in a row. And now I'm going to turn it over to April Adams to go over her slides really quickly, and then we'll jump into the financial information after that.
Thanks, Byron.
No problem.
Right. Yeah, it's my pleasure to be here to give you guys a summary of the audit and tell you where we are and where we plan to be. All right, let's go to the next slide. So what I want to cover first is just give you a couple more details on where we are with the current status, along with what Byron's already told you. Then I'll just briefly remind you of the role of the external auditor. I think all three of you board members that are here have heard this same information from me for a couple of years now, but we'll go over it again. But just role of the external auditor, we'll talk about internal controls, identify the significant audit areas. Then I actually have basically the preliminary results of the audit, what we know already now and where I think we're heading. And I do not have any budget to actual results for you. I think Byron's going to cover that for you after.
Yeah, I will.
We'll be glad to take any questions or comments, or feel free to just interrupt me as we go if you want. Okay, so the current status, as Byron mentioned, we are not done. We do have all intentions to be done and ready to report to the full board next Thursday night, the 14th. But we are still wrapping up some testing related to proprietary revenues and AR, and then the debt section. But saying all that, everything is substantially complete. So when I say those sections are open, it's just, there's a couple of maybe one or two tests, or maybe just the review of the work papers themselves. So nothing wide open, they're just not finished, to be transparent. Single audit, that is also substantially done. We tested, I believe it was 3 programs. I've listed them out on another slide, but we are still testing the coronavirus payroll. We tested it as a whole, but it really needs to be tested on the individual basis to ensure that those individuals reported were paid and covered by those CRF funds by their real salary amount. So that's all we're checking for. So I'm not anticipating any issues. We just need to do the work. And that was caught in the review process, which is why it's not done right now. And then every single audit has to be reviewed by a second partner. So that review still needs to take place. And that should happen later this week or early next week. And then, I'm calling it the CFAR. We're trying to catch that everywhere, but it should be the ACFR. It still needs to be completely reviewed by me and the second partner. I have started the review. I'm reviewing that and the files at the same time this week. And so we're working through that. I'm probably somewhere in the 50 to 60% done on that. But I've looked at the major changes that or things that to catch. So now we're just working on the minor details of that report. And then just to reiterate the challenges and why we are here, late in the year or early in 2022, telling you that we're not done. We're still working remotely during COVID. This is the second year that the city's prepared the ACFR. And they're using, like Byron detailed out, a little bit different software. Carlene, who I believe you've probably met over the years, that's been working on this audit. She has retired as of last Friday. And so really it's just a team of me trying to wrap this up for you guys in time. And so Carlene did the best she could last week to get everything to a place where I can review it. And so that's why we're in this role. And so I'm reviewing it and fixing things at the same time as we go. And then just as, this year's just like every other year, it seems like now, it's just the workload balance is becoming, a challenge for both your finance department as well as Cherry Beckert this year. I mean, we've had people out at different times with COVID, and I am going to say the Great Resignation has impacted Cherry Beckert. We had some people leave and turn over. And obviously with Carlene retiring, all of that just presented a lot of challenges, and you guys are not alone in this situation. We have lots of clients that delayed over the last couple of months. And that, of course, has been hard for us to deal with as not knowing how all the work was going to come out and need to be done, and trying to shuffling resources and keeping people that are familiar with clients and their work papers and their details in order to do a good audit. So we've been working through all that, and it's just taking longer than expected and causing all kinds of delays all over the place. But you're not alone. There's several entities that are issuing or haven't issued even up till now. So you're in good company in that regard, but I'm sure not what you want.
Well, let me ask you the question directly. Is there,
Sure.
is there anything that's brought us to this delayed point, which is not a sort of short-term one-off type of problem, right? That we know that, you have people retiring and that you have personnel staffing, but is there anything that you look at that you think has contributed to this that was not something which, you can say was, it's COVID or, some external reality?
No, I mean, the other thing that you guys were the finance department was also dealing with a bond offering, both at the interim work that we do and as Byron just mentioned, in October, you went through an issuance. And so that's all happening at the same time, that this additional workload to writing the report and gathering and closing the year and all that stuff. So it's just
So you don't see anything systemic or, just
right.
baked into the process that's not happening fast enough. This was, as far as you're concerned, this was all, unpredictable and short-term in general. I mean, obviously, as longer COVID goes on, though, we're going to have this problem, but there's nothing systemic in the operations of the finance department that you think is contributing to this.
Not that I'm aware of. I mean, if anything, I see everyone making progressions in their abilities to do more, but they're also being asked to do more at the same time. So that's systemic. All right, Brian, we can go to the next slide, I think.
Okay.
All right. So the role of the external auditor, just to remind you, we do perform your audit in accordance with auditing standards. There's two sets that we apply as a part of your audit. One is just the generally accepted auditing standards, and then we also apply the government auditing standards. Those standards require us to plan and perform procedures to obtain reasonable assurance that your financial statements are free from material misstatement. And that's a really long sentence, and I'm sure you're wondering, what does that mean? But really, it just means that we do a risk-based audit. So we look for where your audit's most susceptible to being materially misstated, and we focus our procedures there in those areas. And so that also means that we don't test every single transaction. So we would be here all year long, I guess, if we did that. The audit standards require us to express opinions We issue 4 separate opinions for the city, one for each of the audit standards, and then the additional 2 opinions are related to the compliance for federal and state programs that the city administers. And so that gets you to your 4 opinions. And we also call that the single audit related to those last 2 opinions. And then the audit standards require us to communicate certain things to you as a board or the audit committee. And we do that in 2 ways. One is this presentation to you and the board. And then we also issue a letter that accompanies your financial statements. But the types of things that we're communicating is, that we maintained our independence and that we are independent of the city. And then we identify changes that may have come about during the audit or because of the audit and make you aware of those. Like, if there were audit adjustments or if there were, we identify what the estimates are, and if any new accounting standard was implemented, we would make you aware of that through that letter and the presentation. Okay, so internal controls, we don't opine on internal controls, but we are required to do a lot of work for internal controls as a part of the audit and report to you if we found any deficiencies in those internal control reviews. And so what we do is we identify using our judgment what the significant transaction cycles are. It's things like, how does the city collect cash? How does the city disperse cash? How is the payroll cycle paid? How are grants recorded and used? And then the financial close. So what that means is, how does the information get into the financial system and how does it get out of the financial system and into the financial statements themselves, just looking at the controls around that. What we do is we get all the policies and procedures related to each of those cycles, and we review those, and then we do what we call a test of one. So we're taking one transaction related to each of those and testing the initiation of the transaction all the way through how it gets reported in the system and reported in the financial statements. Once we've done all that, we have the option of testing controls and actually relying upon them as a part of our assurance for any significant area. And so we do that related to OPEB, LEOSA, and ELDRS. And we also do it on a rotational basis.
Please walk through what those acronyms mean.
Yeah, sorry. OPEB is the other post-employment benefits. So that's your health insurance for your retirees. And then LEOSA is the law enforcement officer separation allowance, which is the pension plan that's supplemental to your for your law enforcement officers. And then the ELDRS is the local government employee retirement system. That's the plan for all of the pension plan for the local government employees. So we test controls over that. We also test controls over cash disbursements and payroll on a rotational basis. So we do those every 3 years, and we can rely upon that for a 3-year cycle. And then journal entries, we're required to do work for those. We're looking mainly at manual journal entries or unusual journal entries. So we get a data dump of all journal entries throughout the year, and then we mine it looking for unusual transactions, and we'll pull those looking for approval, looking at the actual accounts that were used, looking at the purpose of it, and making sure all makes sense and goes together for those entries. And then lastly, we look at controls around the IT system for the financial IT system, looking mainly at, is it physically secure? Is it secure? Electronically using, like our passwords required, and is it backed up and those types of things? And, with you guys going through your breach 2 years ago, you've got it locked up pretty tight. So we feel good about those controls as well.
What about the app, and the system that our team has built to create the financial statements? Are you would, I guess your testing would have ensured that a transaction has flowed through that and landed in the right place? Is that something, or is that the creation of the financial statement separate from the audit itself in terms of?
Well, we essentially do it because we get all the trial balances out of one system, and then we tick and tie all those we group them in our system, and then we tick and tie to make sure that every account and balance that's in the financial system is in those financial statements. Okay. Materially, of course. All right, Byron, we can go to the next slide. So significant audit areas, as I mentioned, we do the risk-based audit. So this is where this comes into play. Using our judgment, we deem these first 2 categories here, the assets and revenues and the liabilities and expenditures, sections. These are what we deem to be the significant audit areas. So these are where we're testing substantively and spending most of our time. So we're either confirming these balances with third parties. If we can, that's the best assurance we can get. And then beyond that, we are looking analytically at these numbers, making sure that the relationships of them are moving in the right direction or changing in accordance with what we know happened during the year. And then if we have to, we'll do a test of details, which means we're pulling a sample and looking at all the supporting documentation for our sample. And then I didn't want you to think that we ignored long-term debt or capital assets and those types of things listed in that orange box. We do procedures around that. It's just not where we're focusing our time and where we think the most risk exists.
What does IBNR mean?
IBNR is the incurred but not reported related to your self-insurance. So those are the claims that happened. An employee has gone to the doctor prior to year end, but you don't have the invoice yet. So there's an estimate related based on that. All right. So major programs. So the single audit, we are required to identify and determine what major programs are for each year. And so this year, this is where we tested these programs for the various 14 compliance requirements that may be directed material to each one. And so that's the transit cluster, the drinking water and state funds, the corona relief fund.
I'm a worker.
All right, let's go to the next slide. All right, so the results of the audit. I'm happy to tell you that we plan on issuing, based on what we've seen so far, unmodified opinions for all four of the opinions. So as Byron mentioned, that is the opinion that you want. That is the otherwise known as like a clean opinion. And it's the highest level of assurance that we can give you as a firm that your financial statements are free from the material misstatements. And then for those compliance opinions that you're operating and administering those programs in accordance with the compliance requirements. All right, so the required communications, again, this happens through a letter as well, but there was a significant change in accounting policy. The city was required to implement GASB 84, and GASB is the accounting standards board, and they issue accounting standards for all of us to follow. And so this one was related to fiduciary activities. So in the past, you guys have had a agency fund for the red light camera program. And so what this standard has required the city to do is to bring that in from an agency fund into the financial statements as a special revenue, because they're not considering it to be a fiduciary fund. This doesn't fall under the new category of that. And so that adjustment's been made, pretty minor, but still had to be implemented and make you aware of it. The letter also identifies significant estimates that exist in the financial statement, as those are what management knew based at year end. And so as they play out in the future, they could be materially different, but this was what we tested and looked at for June 30th, 2021. And so those are your depreciation. It's based on how long each asset is intended to last. And so depreciation itself is an estimate. Your allowance for your doubtful accounts on your accounts receivable are considered an estimate. And then the two pension plans that I mentioned earlier, as well as the other post-employment benefit plan for the health insurance, are all estimates within your financial statement.
Are those estimates made right there on July 1st and booked somewhere? Are they?
So each one is handled a little differently, and hopefully I don't lose you in this because it is kind of convoluted. But for the pension plan for elders, that is actually estimated as of December 31st, 2019. And then there's some roll forward procedures that are done by the actuary to get you to June 30th, 2020. And then we report based on that number, and then we add what contributions were made in 2021 within the financial statement. And so each one of them has their own unique situation. The OPEB report is actually as of 6/30/2021. So that's there wasn't any roll forward to that. But I believe it's measured as of June 30th, 2020. Everybody's kind of on their different cycle. So just because I've been in your details recently, I know what the OPEB was. And then the LEOSA is kind of similar to the pension. It's done at December 31st, 2020. And then
those estimates aren't necessarily calculations made by our staff at the end of the year, they're incorporating documentation being reported to us in many ways.
So the city's responsibility for those is to provide good census data, so good information about their employees. So for pension, they're required to submit information to Orbit and put accurate information into Orbit every year. And so the actuaries take that Orbit information and create the estimate. So the only role the city really has is the information that they give the actuary, but the actuary's information is only good as what the city provides. Does that
Okay.
make sense?
Thank you.
Mhm. So we do a lot of testing around the census data itself to make sure. Okay, so I'm going to cover some issues an issue that was identified as a result of the audit, but it results in audit adjustment and some findings, but it's all related to the same thing, and Byron's already hit on what it is. But when we did our test, our search, we call it a search for unrecorded liabilities, and it's related to the cutoff of accounts payable. We identified, and there were actually 2 invoices. Byron mentioned one earlier, but it was actually 2 invoices related to the PAL bill that were not accrued at year end. And so those amounted to a little under $1 million, but so there was one audit adjustment proposed related to that. And then I'm going to skip down to the orange boxes real quick because it's all related. So because that cutoff was missed and the amount of it, it causes us to have to call it a significant deficiency for internal controls. And so that is related to itself. And then for PAL bill, because we issue a separate opinion and there's separate rules related to that, we also had to issue a finding related for just PAL bill itself. And it's because the AP cutoff expenses that were missed are PAL bill, that's all related. Does that make sense? So you get 2 findings for it, but it's all one issue.
Have you reviewed the mitigation that staff has reviewed with us? I mean, is that involved in any testing, or does that happen next year?
That happens next year, but I mean, it's already been addressed for
If I could just say, it's really, it's a shame that this is occurred, but hey, we're going to learn and move forward from it. But ultimately, the invoice came in, the invoice was paid just like it should have been. It came in after June 30th. The wrong invoice date was entered into the system when the invoice was paid. So with that invoice date being prior to June 30th, it should have gone back into the prior year. That's just it's an accounting, because we're not on a cash basis of accounting, we're on an accrual basis of accounting. And April can attest to this. This is a normal part of the auditing process of making sure that the financial services department accrues everything that comes in, like that in first quarter of the new fiscal year that has an invoice date prior to June 30th back into the prior fiscal year, because we are on an accrual basis of financial statements. This one just happened to have the wrong date entered in the system. So our financial services department did not accrue it. But with that being said, like you heard Byron say, there has been a step put in place to make sure that everything over a certain dollar amount after that financial statement, after that June 30th deadline, that even though it will, no matter what is entered in the system, we're going to do a separate, no matter what the person within the department, within the accounts payable departments, within each of the individual departments that are processing these invoices, no matter what they enter into the system, we're going to do that extra check to make sure that it's called.
Yeah, that's correct. And just to kind of reiterate, what April had said and kind of what I talked a little bit about before, we have, gone over our mitigation process and our mitigation plan with April and Carlene prior to, before she left, just to make sure that they were comfortable, with what the plan is moving forward. It wouldn't necessarily affect 2021. It would affect, moving forward in 2022, but we have actually talked about that and tried to proactively work to help, mitigate and come up with a plan before the report was actually issued, and we have an official corrective action that would go into that.
I understand that, and I appreciate it, and I certainly can have confidence in staff. I just wanted to have asked the question directly to the auditor.
Yeah, I understand. And I did misspeak earlier. It was 2 invoices. They just occurred at the same time. So they were put in and processed at the same time, which is why.
There you go. Okay.
Okay.
Yep,
So
I've already written 3 checks this month with 2021 on them. So I get it. Yeah.
All right. So not to belabor it, but go back one. So the POW bill shows up as a material weakness and a material noncompliance, and it's really just because of the dollar amount versus the total POW bill program itself. Like it gets its own materiality versus the materiality of the financial statements. And so the POW bill finding is really only about one invoice, because the POW bill finding is about the fact that the invoice wasn't included in the report. So oddly enough, one of these invoices was already included in the report and one of them wasn't, just to make things more complicated. But if the mitigation gets implemented for the just the accounts payable cutoff itself, it will address the issue with the reporting, because the information will be there in the system to get picked up. So
We'll just say it's a very slowly developing Y2K problem.
I joke all the time that everybody thinks technology is supposed to be helping us, but sometimes it's hurting. So. And then the last thing on this slide is I've got it marked new to remind me to talk about it, but the LGC has a new administrative law for us to comply with, and it requires me to communicate to you any performance indicators of concern. And the only one I'm aware of at this moment that would trigger is the audit is late. Obviously, it's past the 5 months due. And so what that will require is you as a board to submit a letter to the LGC telling them what you're going to do to not be late next year. And so that will be coming to you. I'm sure Byron and his team will draft it, and you guys will just need to sign it and submit it within 45 days of whenever we issue the report. So this is me telling you that that's your new responsibility for the year. And obviously, once we've finished the audit, we've entered in all the numbers and look at the performance indicators to see if there's any more, we'll make you aware of them. But I'm not anticipating it. Most of it has to do with fund balance and those types of things, which you guys don't have any issues with that I'm aware of. So.
Oh, sorry, April, go ahead.
Go ahead. No, I was just going to say that was all I had.
Oh, okay. All I was going to say is that, we, as staff will work to make sure that we get that, over to the board so that we can get that submitted as well.
Yeah, we're going to turn the screws on our auditors. That's what we'll tell the local government commission, What are you going to do to make sure the audit gets done? Well, we're going to yell at the auditors. That's what we're going to do.
We'll put those due dates before year end, see how that goes. So anybody got any other questions or comments for me?
I actually have this is Brian, just a very quick question. I think at all these meetings, I've always asked, when are we going to be independent? And so now we are independent. We're on our own. We're doing our own finances, essentially. What would cause us, if anything, to regress in that regard? Would there be anything that would lead to us not being able to do these on our own in the future?
The financial statements?
Right.
Brian.
I mean, it would have to be drastic. Like if Byron and Jeff left and no one came in to fill their place, then I don't see it being.
Yeah.
I think that is I think that's a question for city staff, and maybe Michael just might want to take.
Yeah,
that.
Brian, I believe that, or Councilmember Meyerhoff, I believe that that would be the reason why financial services staff is going the next step to try to cross-train a lot of its staff in order to be able to continue that continuity of services in case there is turnover within the department, so that all the knowledge does not just lie with one person, but there is a procedure and how to to make that happen. I would agree with April that once you move down that road, there is no going back. I think that this city made a significant leap in taking ownership of those financial statements, which I think has created a lot of additional work and responsibility on the department. That's why few around the state actually do it. But I think, and as we've talked about in the past, it's a sense of pride that we have taken that step. But as far as to go move backwards, it's the responsibility of staff and the department to make sure that we have people that are in place with the knowledge to be able to continue that if there was turnover within the department.
Yeah, and just to kind of jump in as well, as I talked about in my first couple of slides, when we decided to move to the cloud storage for redundancy, another aspect of that was the linking of the notes with the financial statements, as well as trying to train staff in that process as well. Part of the whole process of us trying to link everything and make sure that there is a direct path for that is that, any individual that comes in will be able to follow each step from the creation of what goes into the system in our ERP system to what comes out of the ERP system into the financial statements to what goes from the financial statements to the notes, which is, basically what makes up the full report itself. So the idea that we have multiple people trained and we have multiple people working through that process, is kind of what helps us, ensure that if there's any turnover, if there's any, staff outages, obviously with COVID, at any point, anyone could, potentially get sick and be out for a period of time. We want to make sure that that doesn't cause a loss of time or a loss of knowledge within our department or within the city to ensure that we can still kind of keep this process moving and keep this process going. So, we're in the second year of preparing these financial statements, and that obviously has been a challenge to make sure that there is staff knowledge of the process and staff knowledge that can easily be transferred from one staff member to another during that. So, we're working toward that, and we're getting better at that. And, we also do kind of want to continue to create some sort of manual policy and procedure or physical policy and procedure that, any other staff, any new staff coming in without any knowledge of our financial statements or our financial processes would be able to follow and pick up, quickly and be able to kind of continue on in case of any sort of staff turnover.
All right. Thanks, guys.
No problem. Does anybody have any other questions for April?
Again, it's not for April, but so if anybody's got a question for April, go ahead. Okay, so I have questions for staff, but not for April. So does she? Okay. She's welcome to stay, but if she, I don't know, do you need to release her at this point or?
Yeah, April, if you would like to go, you can. We definitely appreciate you being here. And giving us your report for right now.
I appreciate it. Now I'm going to go finish the audit. How about that?
Okay. So, my question is for Matt, because we just talked about the person, the accounting personnel turnover, but in this case, the accounting personnel who would turn over were also the creators of the app that allows us to do this. And so my question is, Matt, do you think that from the technical standpoint of, the workings of the app and the way in which to the extent that there's what amounts to coding, and I realize it may not be specifically coding, but there may be something that's functionally equivalent to it. Is this something that your department, sort of knows and understands and can support and rebuild if one of the people who built it, were to move on?
Yes, and we reviewed this a while back, and we are comfortable in the way it is set up, the way it connects, where it's stored. Yeah, we're comfortable with it, and we do have the knowledge to help recreate it or maintain it in the event that somebody leaves.
Cool. Thank you. Okay. Any other questions related to any of the issues we've discussed? Okay, so move on to the next step.
Okay, so we will move on to an overview of the general fund. So just briefly, the general fund revenues were about $1 million net of expenses or greater than expenses for the 2021 fiscal year. They were within about 1% of the revenues, but the revenues were higher this year. So we did run a small surplus for the year. Just a quick breakdown, about 72% of our revenue comes from sales tax and property tax. Obviously, even in the midst of COVID, we do see our two most stable sources of revenue continuing to grow, increase, and be a source that we can rely upon at this point. While there has been some volatility and some things that we are somewhat, still concerned about in the midst of COVID, just with the uncertainty, that still exists, we do feel confident that these revenues are still sustainable for us, and we don't see any long-term regression in those as of right now. Just a further breakdown, in terms of revenues, we were about $450,000 above budget for the year, which is about just under half a percentage point within the budget for the actual revenues, excluding the appropriated fund balance. Obviously, as I mentioned before, there is still some continued impact on our revenues from COVID-19. That's mainly in our sales and services and our fees, just with changes in programming and, issues in terms of those programs being affected by COVID-19. That is still a concern, and we're still monitoring that. We are cautiously optimistic as we see in our revenues, continuing to, meet budget and exceed budget even a little bit, that we are still in good financial position, and we do see those revenues, kind of coming back from the uncertainty that we saw at the initial onset of the pandemic.
This is budget as amended, right?
Yes. These are the amended budget numbers. After, if you recall, we did a budget amendment about halfway through the year last year. We had initially set a really conservative estimate for our revenues in the anticipation that COVID-19 was going to cause some pretty significant deficiencies in the amount of revenue that we would get. However, as the year progressed, we started to see that our revenues were kind of maintaining a level of stability during the year. So we were able to go in and amend that budget to make a more realistic projection of where our revenues were going to be. One area in particular that we ended up increasing after, kind of decreasing very conservatively in the beginning of the year was our other taxes, which is mainly made up of our sales tax. And as you can see, our sales tax increased about 18% in the fiscal year 2021. So, sales tax is booming right now. And, we obviously are still cautiously optimistic, but we do see a lot of very positive gains in our sales taxes for the year, even in the midst of COVID. So we're continuing to monitor that. Right now, staff is projecting that we're going to end up being another, $2 million or so over our actual mark for 2021 in 2022. So we are still seeing positive gains in sales taxes.
So
Yeah, to add to that, Byron, I think that when we started through this last fiscal year with the uncertainty of COVID, our concern was with all revenue sources.
Right.
I think what we were surprised to see that the tax revenues, not only did they not reduce, but they actually increased, specifically sales tax. The other concern was these other sales and service type of other revenues that did have a more were more locally impacted by COVID-19. As you heard Byron say, that this fiscal year, we have seen a rebound in these other revenues, still not quite where we want to be. But they have improved what we're seeing so far this year, and the sales tax, I just don't understand it. It just continues to just go up, which is awesome. But my 2 cents worth on that would be is that it's a very vulnerable revenue source, and we just gotta remember that as we move forward.
So I certainly would have no issues with forecasting. I fully understand the forecasting challenges, of the COVID era, right? My question would be, and again, it's not something you would do this year, but for forecasting purposes, to evaluate the adequacy of our forecasting, we wouldn't want to look at the budget as revised, right? You'd want to look at the budget as originally adopted in order to see, hey, we thought we'd spend this amount of money, and yeah, we spent more and we revised the budget. But for forecasting, that's perfectly fine for accounting, but for forecasting, you'd want to know how accurate your original adopted budget was, correct?
Yes, and the main reason why I ended up using revised budget numbers here was due to the fact that this is our revised numbers are a lot closer to what we initially projected before, or initially kind of started the budget process with before we started seeing the major effects of COVID when we were trying to approve the budget. So a lot of our original budget numbers are based on very depressed estimates based on our initial assumptions of where COVID was kind of going to be. So
in any event, an environment that was, dramatically removed from prior experience. So
Yes.
I get it.
Yeah. But I can definitely make that change for the full board presentation. I'll go back and amend this this particular slide in this particular section to include those original budget numbers, just so we can get a better picture of where we were going to start at the beginning of the year versus where we ended up.
Yeah, just the way the history happened, the history as it happened, I think is valuable.
Okay.
We thought this, we did this changed, we adjusted. Sometimes looking at budget as revised makes you look really good. Like, wow, we were really sharp. Look, 18 months ago, we guessed perfectly.
Yeah, you're right. I completely understand. So I'll definitely make sure that that those changes are implemented and included in the presentation. So just to briefly talk about expenses as well in the general fund, our total expenses ended up being about, and this goes back to kind of what we talked about a second ago, those revised numbers, about $7.5 million under budget. However, a large percentage of that, about $3 million, is due to encumbrances and carryovers from one year to another. So this is actually from 2021 to 2022. One of the things that we also did in addition to, paying attention to the revenues and looking at trying to anticipate, any sort of COVID issues was implement an initial spending freeze early in the year in order to try and anticipate any sort of, major adjustments that needed to happen operationally related to COVID-19. So we were able to kind of slowly bring some of that back, but a lot of our encumbrances and carryovers into this current fiscal year is due to the fact that we did implement a spending freeze early, and it did, kind of delay some of our operational expenditures in 2021 that are now going to carry to 2022.
So those numbers at the bottom, the years on the bottom should have been iterated one, right?
Yes,
Okay.
it should be 2021 to 2022. Sorry about that.
That's okay. Just making sure I knew it.
So about 45%.
I will, Byron, I'm just to give a couple of comments in there. That's why you'll see, as we start talking about fund balance going up, but a lot of that has to do with carryover, because just for example, with vehicles, there was a large vehicle purchase that didn't get made until the end of the fiscal year. And quite frankly, we don't know if we're going to even get those vehicles this year because of the supply chain impacts. So there is a significant amount of carryover as far as encumbrances.
Right. So just to briefly talk about public safety. Public safety continues to be the largest component of our expenses in the general fund. It's about 45%. One of the other areas that we did see a significant budget to actual variance within our public safety divisions is due to about $1.3 million of our public safety salaries being funded by coronavirus relief funds from the allocation that we received from Pitt County. So those expenses, that $1.3 million was actually moved to another fund because it was covered by those CRF dollars. So we did see another, budget to actual variance there that caused the actuals to be a little bit less than budget as well. So that in addition to, you know, a lot of those encumbrances and those carryovers, this also plays into the fact that we were under budget in expenses. Another area, just as I talked about earlier, we implemented the spending freeze. And while we did go back and have some mid-year budget increases, we did hold a little bit into contingency just for any sort of potential COVID needs that might arise at the end of the fiscal year. Luckily, we did not have to use the majority of that contingency funding. So it was able to kind of sit there in contingency and you know, serve as another area that was under budget. But we did make a conscious effort to ensure that in the event that we did have any sort of you know, COVID expenses that needed to take place at the end of the fiscal year, we had funding available for that. So just to briefly talk a little bit about the general fund balance. Fund balance did go up about $1 million, as you saw, you know, with the initial slide where revenues were above expenses. The primary contributors to fund balance increasing for the year is that the impact of COVID-19 was still a little bit less significant than we initially projected. So we did see some gains there with expenses being lower than revenues coming in, as well as the use of those county CRF dollars to fund those public safety salaries, that $1.3 million. And then also just the timing of the operational expenditures, which is kind of what we talked about with the encumbrances and the carryover funding. In terms of the position, we do see the breakdown of the $26.6 million in total fund balance split out among your non-spendable, restricted, committed, assigned, and unassigned fund balances. One area of note is that the restricted number did increase in the current fiscal year from last year. The majority of that really is due to those higher sales tax figures. As Michael stated earlier, you know, obviously sales tax has been booming, and we saw that our sales tax estimate at the end of the year ended up being about $1 million over what we had projected in the previous fiscal year for the 2 months that we had to carry as a receivable on the books, since we received sales tax 2 months later than when they occurred. And then even in addition to that increase, we still saw that they were higher than what we had initially projected. So it can't be understated that, you know, sales taxes being so high has caused our restricted fund balance position to increase a little bit higher than where it was last year.
But that's an accounting requirement, right? It has nothing to do with actions by or decisions by staff or council, right?
Right. We
Right.
don't receive those sales tax until, you know, 2 months in arrears, basically.
There-
So
there-
we, go
Yeah,
ahead.
and you know, I could go into the weeds of all the irony involved in this, because it's a cash flow issue. Once again, our financial statements, our revenue are based on an accrual basis. So we have to accrue that sales tax revenue, even though we receive it. And we have to re-record the sales tax revenue in the prior year, even though we receive it in the current year. But then we have to come back and restrict it in fund balance because we hadn't received it yet. Right. So there's this cash basis, accrual basis, switching back and forth within the financial statements it's more of just accounting jargon, but it does have an impact on the way the numbers are presented.
Yeah, I'm just trying to parse out things which are within the discretion of staff and council versus what is just driven by, you know, realities outside of our control.
Yeah.
So,
Matter of fact, you know, Councilmember Smiley, a lot of what the dollars that the way I look at this when it comes to sales tax is on a cash basis, because I know of how it's going to be impacted within the financial statements, just to look at the swings from one month to the next. And not to keep harping on it, sales tax is an enigma. It just really is an enigma. Anyway.
All right. So that brings our unassigned fund balance number to about $14.7 million before the 2022 designations. And just to remind the members of the committee, one of the things that we did at the beginning of last fiscal year was, or the beginning of last year, was to update our financial services policies. And within that policy, we did include additional language within the unassigned fund balance policy that the city will maintain a floor of 14%, just like we always have, but that we will strive to maintain 16 to 18% of that total current operating budget in unassigned fund balance. So a quick look at the calculation, our 14% of our unassigned, 14% of our
Budget.
Yes, thank you. Sorry about that. 14% of our budget for the current fiscal year would be about just over $12 million as our unassigned fund balance. And so when looking at the unassigned fund balance before the designations and after the designations, we end up with about 14.75% of unassigned fund balance. We had about $2 million worth of designations from the appropriated fund balance that we included in the 2022 budget, as well as the department carryovers of about $1.2 million, which I'll go into a little bit of the breakdown in a little bit. And then in addition to that, we did have some other projects that also were included as well in our 2020 fund balance designations for the current fiscal year.
So in the past, I guess we've always treated those designations as something, because if I understand, these are basically things that happened on July 1st, right? That on 6/30, a lot of things, on 30 June, the fiscal year ended and assigned funds became unassigned. And then we went back in the new fiscal year and then designated or assigned some of them. Is that correct?
That's correct.
So
that's correct.
The 14 million was basically the 14.7 is basically the June 30th number, and the 12,059 is as modified by actions, maybe immediately into the new fiscal year, but certainly in this year, right? What's the percentage of what is 14.7 come to as a percentage of total budget?
That's the 12.7. So the 14.7 is the initial unassigned at the end of the year. And with the about $2 million in designations in the current fiscal year, that 12.7 is the actual unassigned fund balance after those designations. So the 12,059 is the 14% floor. The 12.7 is the current fiscal year unassigned, or the current unassigned fund balance after those designations.
But this is a new calculation, I think. In the past, this percentage has been calculated on unassigned fund balance prior to these designations.
So Councilman Smiles, we're asking what the 14.7% is of the general fund budget.
Yeah, not the percentage, the 14.7 million at the top line number. What is that as a percentage of our total budget?
I got you. I believe it's just over 15%, like right at about 15.25. I believe I can run that calculation.
Byron, if you go back to the previous slide, real quick.
This one,
yeah, right there.
Yeah.
It is 17%.
Yeah, because again, I think in the past, that is the percentage you've shown us, that you've taken the unassigned fund balance as of the end of the year prior to, and I got no problem with the new approach. I just want to make sure we understand that, make sure I understand this correctly. That in the past, we've taken the unassigned fund balance prior to new designations in the current fiscal year and reported our unassigned fund balance percentage as that. And this calculation, go forward to the slide to that slide. This calculation builds an unassigned fund balance after appropriations based upon designations made in the current fiscal year. Right. Is that change of calculation? A, am I correct? Is that a change in calculation? And B, is that reflected in the policy?
So it would be included in the policy, considering the fact that we've already started to make those designations at the beginning of the year. So, in the past, I think when we would, potentially show you those, that unassigned fund balance before designations, I don't necessarily feel it's the most accurate reflection of kind of where we are at this moment in the midst of working through the audit report, because of the fact that we have done some carryovers. We have appropriated the fund balance at the beginning of the fiscal year, and any other fund balance appropriations that we've made during this current fiscal year. So I kind of wanted to give the committee and, obviously we can change it, but look to give the council a better sense of where we are currently with our fund balance calculation and where we sit currently in terms of the percentage of where we are in relation to the floor.
And I agree completely. I think that this new metric is a dramatic upgrade on the previous approach. I just don't want to bury the change in the math.
Yeah, I get you.
So Byron, what I'm hearing Councilmember Smiley say is what we need to do is we need to add, when you present this to the full council, you need to add a slide, or at least maybe on the previous slide, or on this slide, you can work that out, but show what that percentage is. We want to show both percentages, basically. We want to show the before as of the end of June 30th, and then what the percentage is right now based off of what council has already appropriated within this current fiscal year, and which is inclusive of the carryovers, the amount that was included in fund balance to actually balance this year's budget, et cetera, what you see right here.
Yeah.
And you can explain that going forward, this is the new approach we're going to use because it's a better approach. Again, I completely agree with that. I just think that from my monitoring of this equation over the last few years, this math is different, and I think it's better, but I think if we're going to make the change, it has to be explicit. So people aren't comparing this 14.75 number to a percentage 3 years ago, which was measuring a different thing. Right.
Yeah. And just for the sake of transparency, we'll make sure to do that for the full board and for, the public and as at large. So yes, I'll certainly go back and add that other percentage just to talk through this year, to show that we're going to now look at the unassigned fund balance after the appropriations, when considering those percentages and making sure that we strive based on our policy of, maintaining a floor and looking to strive toward that 16 to 18%.
And if I understand it, just to close the loop on this, the legislative requirement is what, 6%?
It's 8%.
8%, and it's before designations, right?
Right.
Yeah. So so we are exceeding the minimum requirement both in volume, both in the amount and in the sophistication of our calculation.
That's correct.
Thank you.
Mm-hmm. All right. So just to kind of talk briefly about the different areas of carryover. We did have about $1.2 million in carryover. That is additional projects and operational expenses that would have occurred in the prior fiscal year, but will now occur in the current fiscal year, just due to the timing of operations, as well as the initial spending freeze at the beginning of the year. Further breakdown, they occur in 4 different departments, and all of them still meet our city council goals and objectives. We made sure that everything that we're carrying over is going to meet one of those areas of a council goal. So just to kind of further break that down, about 45% of it is infrastructure, about 30% of it is economic development, 11% is thriving and attractive community, and then about 15% is a highly performing workforce. So as I said a second ago, 100% of these carryover projects are designated to meet a council goal. The other appropriations, we had 3. The bathroom renovation at the Aquatics and Fitness Center, just a small reconciliation of occupancy tax cash where we actually reduced fund balance, and then some additional historic preservation work, $25,000 that we appropriated at the beginning of the year. And so that's the additional just over $100,000 that also were appropriated during the current fiscal year. And so in terms of next steps, obviously we will work, Chair Becker will work to complete the review so that we can have an audit, final and a report final, as well as a board presentation by both the auditors and staff at the January 13th council meeting. we'll have the LGC approval for the audit, and we will submit for the certificate of achievement in the next fiscal year. And just to kind of wrap up, I do want to thank, obviously, Cherry Beckert. I know April's not on the call anymore, but definitely want to thank her and her staff. Carlene's, has retired, as she mentioned, but, working through this process with them, just definitely want to thank them for all the work that they do. Also want to thank all the city staff, certainly the ones on this call, from our own staff, Jacob and his work, trying to work through preparing the financial statements, as well as all the other staff that we have. And additionally, Alicia and Becky working through single audit from the city manager's office. Definitely want to thank you all as well for all the work that you do. And obviously, Matt, we can't do this without you. You guys make our system run and make sure that we can get things converted over to these statements. So we definitely appreciate all the work that city staff has done. So that we can continue to do this, continue to be successful in this endeavor of, performing our own financial statements and continuing to try and have clean audits year over year.
Hey, and Byron, I hate that I didn't say this when earlier with Cherry Beckert on the line, but it really is. We owe a thanks to Carlene. Carlene was one heck of a great auditor. Yeah. Probably the best auditor that I've ever seen. Certainly probably the most thorough auditor that I have ever seen, to the point of making me mad every now and then. But I will say that she did a great service. I know she was being paid for it, but she did a great service to the city while she was here. Well, she worked on the city's annual audit and has been a great benefit to our internal audit staff. Alicia and Becky, learned a lot from her, as well as financial services. So. Hopefully, Cherry Beckert will find another as well as good as her.
Yeah. She certainly left no stone unturned. I can say that for sure. But we appreciate
every year the auditor, the audit partner calls me and interviews me for due to my role here, and I'll be sure to let them know that they missed the thoroughness that Carlene brought, so that that the new auditor needs to definitely step up their game and be even more thorough than.
Well, I don't know about that now.
Does anybody? I'll reiterate those thanks. I think that I ask a lot of impertinent questions here, and but it's I have a tremendous amount of confidence in the skills and the competence and the esprit de corps of the city staff and the financial services team. So thank you all for all the good work you do. And it's incredibly important, and it's incredibly reassuring both to the council and to the citizens that you are so good at what you do. Anybody else have any comments to make?
I want to thank our staff and our city manager's office, everybody that's involved in our keeping our finances as well as they do. Certainly I've been in places where the finances didn't get good reports every year, but I just really thank the staff. It's a hard job, and I know that it works you a lot, but you are most appreciated, because in other situations, there is not anyone to back up on. And I'd like to thank the city manager's office for keeping up with our finances and making sure. And Mr. Magic Man, I call him Michael. We are most appreciative of the work that you do with the finance department, and also our city manager. She cracks the whip and keeps them going. So I just really appreciate all the work you all do. I get the same call from the auditors every year. So I think that it feels good to say, we have a great financial department.
Well, I can assure you that it's the individuals you, Council Member Mayor Pro Tem Glover, it's the employees you see here, the staff, it's the Byron, it's the Jacobs, the Beckys, the Alicias. I mean, they're the ones, believe me, they're under a lot of pressure to get this thing right. You just don't know how much it burns, but when an invoice date is entered in the system wrong. and something as it's something as petty to me as that. But ultimately, it is what it is. We got an obligation to get it right, but they're under a significant amount of pressure to keep the bar high. Well, I can assure you that.
Well, and
They do a great job.
if I could just piggyback on what Michael just said is, I think we can't have this conversation without acknowledging that the very difficult circumstances over the last almost 24 months, in which the staff has had to work with Jerry Becker to get all this done, and with all the departments. And so the staff should be applauded that we are in the place that we are today. But it is a team effort, and with great leadership, certainly through Michael and Byron, Ken, Alicia, Becky, and the whole financial services team.
And just in addition to that, one thing that I do just want to say is one of the things that we do try and strive ourselves or try and pride ourselves on in our department is continuous improvement. That is one thing that we really look forward and really try and work hard to make sure that we do. So we appreciate all the questions and all the feedback that the council has provided us over the years, and everything that continues to allow us to maintain that continuous improvement, the things that we need to think about, the things that we didn't we might have missed or might not have seen, so that we can ensure that we give you all the best possible product that we can possibly give you as staff to our council.
It's our job is to hold the bar really high, so you have this wonderful sense of accomplishment when you clear it.
Well,
I'm sure
I
you
do
appreciate that we do that.
I do think we do need to call out Jacob and give a real special thanks to Jacob for lots of hand clapping. Jacob, for you. Thumbs up. Thank you.
Okay, if there are no more comments or no more business, we will, I don't think we have a date to set for a next meeting, right? We'll be getting that in due course.
Yes.
Okay. So if there's no need to set a new date, then I don't think we have any additional business. Is there any additional business anybody would like to suggest? If not, I'll entertain a motion to adjourn.
Motions. So moved.
Is there a second?
I'll second it.
Okay,
Couldn't get the cue.
all those in
Sorry.
favor, please say aye. Aye.
Aye.
All opposed? We are adjourned. Thank you very much.
Thank you all.